And in our top business story, January to September this year has been the most successful 9 months so far in terms of guest arrivals, guest nights, occupancy and revenue for the capital's 156 hotels and hotel apartments. Figures released today by the Abu Dhabi Tourism and Culture Authority show that from the beginning of 2014 to the end of September, 2,498,672 guests checked into the Emirates accommodation, a 26% year-on-year increase. The arrivals delivered just over 7.5 million guest nights, which was up 21% on the same period last year, with hotel occupancy rising 7% to 73%. Hotel revenues climbed to 4.268 billion dirhams, which is a 15% growth on last year. Room revenues rose 16% to nearly 2.2 million dirhams, and food and beverage income jumped 12% to just over 1.6 million dirhams. And staying in the capital, Abu Dhabi's gross domestic product reached 953.2 billion dirhams in 2013, marking a 4.8% increase from 2012, as announced by the Statistics Centre Abu Dhabi. The announcement came at a press conference to launch the centre's statistical yearbook, during which officials said that the main activities contributing to economic growth in 2013 were mining and quarrying, which increased by 13.2%. The second largest contributor was real estate, which grew by 12.9%, followed by finance and insurance, growing 11.2%. Additionally, oil trade accounted for 55% of the GDP, totaling 523.9 billion dirhams, with 490.5 billion in exports, while non-oil trade accounted for 45%, with 16 billion dirhams in exports during 2013. The US was the top import partner, supplying Abu Dhabi with goods worth 12.7 billion dirhams, while Saudi Arabia was the top destination of the Emirates' non-oil exports, receiving goods worth 6.7 billion dirhams. French hospitality giant Accor recently announced plans to invest 225 million euros into the development of its digital services in the Middle East in the coming 5 years. By 2020, Accor Hotel Services Middle East plans to double its room count in the region to over 30,000. This was among the announcements made by the group's chairman and CEO, Sébastien Bazin, during the grand opening of the Sofitel Downtown Dubai on Tuesday night. From a global perspective, he says, they see strong growth potential in the region, given that there are on average only 2 rooms per 1,000 inhabitants in the Middle East. That's compared to 10 and above in more matured markets. He added that they are witnessing rising demand for the development of more hotels across all of their segments, from economy to luxury. He says this is the reason behind the introduction of 3 new brands in the region this year, which are Adagio Serviced Apartments, Majlis Grand Mercure and Ibis Styles. The GCC's improving infrastructure, Dubai hosting the Expo 2020, the 2022 FIFA World Cup in Qatar, and Saudi Arabia's target to increase visitors to its holy cities of Mecca and Medina were the key factors underpinning their expansion. When Sofitel Downtown had its soft opening in May this year, it was already overbooked.
Well, we have opened our first Sofitel in 2006, so Sofitel Beach Residence, and since we have been growing. It was followed by the Sofitel in Abu Dhabi, the Sofitel Dubai The Palm, and today is the inauguration of the Sofitel Downtown, which opened in May this year. Well, it's growing. We have some plan. We have room for at least another Sofitel in Dubai. It's a very promising market. It's a dynamic market. It's a competitive market, but we have the right brand for Dubai, that's for sure.
Lootah Real Estate Development has announced that it has broken ground on the second phase of its 350 million Shamal community project over at the Jumeirah Village Circle. The second phase of the project is scheduled to be completed by June 2016, which will be comprised of a cluster of 1,024 residential units that includes 792 studios and 232 lofts. It will also be situated between the Sheikh Mohammed bin Zayed Road and the Al Khail Road. Saleh Abdullah Lootah, the executive director of Lootah Real Estate Development, said that the launch was taking place at a time of highly positive market sentiment due to investor-friendly regulations introduced by the UAE regulator.